This is looking at accounting for material, labor, and overheads. These are very important because when you look at management accounting, remember, if you've studied the theory, production costs are broken up into these three: direct material, direct labor, and manufacturing overheads.
Yes.
Okay, so you need to always consider these three when looking at anything management accounting specific. Right, if you look at the scope on page 59, you'll see part 1 here was looking at the valuing of inventory. That's what we just looked at. Okay, this is part 2. Part 2 is looking at 4 things. ABC, which is activity-based costing. Okay, the word activity, I'm just trying to summarize as best I can in a short amount of time, just to give you a little bit of theory as well. You can read more about it later when you go through the textbook in more detail. Right, but I'm just highlighting that word activity-based costing. Right, because here you basically take production and you split it into activities or processes. And that's the basis of allocation. Right, just to summarize in like a nutshell. Okay, one simple, easy sentence to remember what that is. Okay, then you've got B, which is the second one, or number 6, which is job costing. Right, and this is looking at individual jobs, for a lack of a better word. Okay, individual, inverted commas, jobs. Okay, or it could be even like items, like one product. Like one product needs to go through several stages. Okay, but that could be one job. Okay, so a job is just looking at separating. Not separating the production in terms of the whole process into different activities. That's ABC. With job costing, you're separating the different like products, the different jobs into separate categories, and then you're looking at each of them. Does that make sense? I mean, it's quite similar, but still different.
Yeah, no, it makes sense.
Okay, so yeah, separate, inverted commas, jobs. That's the second one, and then you've got 2 more. You've got process costing. Process costing is actually very similar to ABC, but there you're looking more at the process rather than the activities. So the one here at the top, I wrote processes. I don't think that's the best way of describing it. Let's rather use the word tasks. Okay, tasks rather than processes, because it's more the business's production. So for example, one task in terms of activity could be cutting, okay, and then painting. There could be assembly. Yeah. Okay, so do you see those are activities? Does that make sense?
Yes.
Okay, they're not really processes. I think I used process, but that's not the best way of describing it. It's more like a task, like an activity. Activity is the best way of describing it. An activity is an activity. It's something that you do, but it's specific to a specific thing.
Yeah. So like at first, like making tables, the cutting of the table, the painting, the
correct, putting, and all of that. Yeah. The process is looking more at like step 1 to 3, and then step 4 to 6, if that makes sense. Okay, so process costing is looking at those like stages of production. Right, not so much activities, more so in terms of process, like the different steps that you would have to use in order to get to the finished product, the outputs. Okay, and then the last one that they've mentioned here in study unit 8 is joint and byproduct costing. Right, that's not a very popular one. That one is quite separate, quite different. these are the popular ones: activity-based, job costing, and process costing. This one is specific to management accounting, MAC. This one I haven't seen in other modules. Byproduct costing. Okay, not as popular. The first three are more popular. Okay, so let's look at each of them. Okay, so the first one, study unit 4. Here they talk about material. Let's page through this chapter and see if there's anything specific that we can look at in terms of workings. Alright, there's a few journal entries here on page 64. How much accounting do you still remember?
Yeah, no, I do have it. I do remember it.
Are you doing any FAC modules this semester?
Yes, FAC 2601.
Okay, then you should be perfect in terms of debits and credits and
yes,
recording things in terms of the asset or liability, that type of thing.
Yes.
Okay, so do you need me to go through the accounting, or are you okay with that?
No, I'm okay with the journal entries.
Okay, perfect.
Journal entries, I'm fine.
All right. On the next page, you've got the start here of calculations for EOQ. Okay, this is a calculation. We need to look at it. I actually have a separate formula page that I want to just bring up quickly. Just give me a sec just to get the formulas because they look better in Word than they do in Excel. So I just want to bring that up first and then we can look at it. I'm just going to open up a Word document and then we can draw up the equations. Right, so I've got a simple way of remembering EOQ in terms of working. I just want to see what formula they've given you here. Okay, they've given you the long equation where they've taken the interest rate and purchase price into consideration as well. Okay, so you do need to know a bit more depth. Let's see what else they give. Okay, then that's the summary. Okay, so this is a short chapter. It's not so long. I see in their questions though they don't test the interest. They just give you. Oh, they have given you one. Okay, the last question, question 3 on page 74 is a nice question looking at the actual interest part of it. Okay, so I'm just using this just to create the equation. Okay, so EOQ equals with EOQ, if you look at what they've given you this equation here on page 70. Square roots. Can you see that?
Yes, I see it.
Okay.
I see it. The 2UCHPI one.
Yeah, so usage or supply or I think demand. Other textbooks. So EOQ comes up in quite a few modules actually. This is not the first time that UNISA has given EOQ in one of the modules. It comes up in financial management as well. In one of the modules, they talk about EOQ. It's not a difficult calculation to do, but it's something that you do need to consider when managing inventory. Okay, so 2 times the demand. Okay, in your textbook they refer to it as usage. Okay, in brackets they show the word demand, which is fine. Okay, so they're still relating it to demand. And then you've got C, which is the order costs.
Yes.
Okay, and then you divide that by the holding cost or the carrying cost. Okay, so see, this is the basic equation. Right, but now you do sometimes consider the effects of interest on this particular working, purely because as a business there are going to be costs associated to the money that you're either going to be using, okay, or saving, or the opportunity cost that you lose out on, okay, having made use of that money. Because remember, time value of money says if you put money in the bank account, you're going to earn interest, right?
Yes.
Yeah. So there's always something that you need to consider here in terms of the rate, okay, the interest rate that's required as part of the purchase price of the assets, okay, or the units that are being identified here. Okay, so there's the formula. EOQ is important. Do you know what EOQ represents? Any idea?
No.
Okay, so EOQ stands for the Economic Order Quantity. Right, if something is economic, what does that mean? Think of your economics.
Yeah, so it's economic. It's user friendly. It's economically friendly. It's like a good option. It's like not expensive.
Okay, that's good. Not expensive is a good way of describing it here, because when looking at economic order quantity, what does it measure? It's a measure of stock ordered that will minimize ordering and holding costs. That's what you're looking at. Okay, that's what EOQ is for. Right, that's the theory. Right, economic order quantity, just to summarize, is a measure of the stock that must be ordered that will minimize the ordering and holding costs. Okay, just in terms of theory, this is important to understand. Ordering and then holding / carrying costs. Okay, so if I'm looking at EOQ, remember, in terms of business, you're either going to be buying in bulk or you're going to be buying in single units. Which is cheaper?
Obviously buying bulk.
Buying in bulk, correct. So if you're going to be ordering goods, are the costs going to increase or decrease when buying more?
Your costs will decrease.
Correct. Okay, so costs decrease the lower we go.
Yes.
But now, if I buy more goods, will I have more to stock or less to stock?
If you buy more goods, you'll have more to stock.
Correct. So will the carrying cost increase or decrease?
Decrease.
Correct.
Yeah.
Okay, so if I order an item, I'll have low costs when I buy bulk, when I place an order, and I'll have high costs when I buy one. Okay, with holding costs, it's the opposite.
Yeah, so
okay,
when you
one item is low in terms of holding costs, and many items have a high holding cost. Do you agree?
Yes.
Okay, that's common sense. It's not EOQ is a nice one. It's not that difficult to interpret in terms of theory. Right, then you just need to consider how much demand or how much units does the company or the business actually make use of during the life of the business. That's something to consider when looking at EOQ. It's the demand. Okay, how much is demanded by the business? Is that okay?
Yes.
Alright, so that's important theory to remember. The one increases and the one decreases. At some point in time, let's just assume it's there in the middle.
That's like that will be the perfect amount for the business to have.
Correct. Minimizing ordering and holding costs. Okay, and that's what you're looking at when you look at EOQ. So now we don't have to draw up a table. You can do this manually if you really want to, but it's not necessary. Okay, we just do an EOQ calculation. Okay, EOQ in terms of this formula gives us the exact point at which we minimize our ordering and holding costs. Does that make sense?
Okay, so then that eliminates actually doing it in a table mode. What you just said.
Okay, you just use the formula for the actual EOQ. Okay, so that's the simplified formula. The one that they've given you here also includes the interest rate multiplied by the purchase price. Okay, this is just an additional consideration that helps you to refine the EOQ calculation a little bit more, just so you've got a more accurate measure of EOQ. Okay, and that's the formula that you'll see on page 70.
Yeah, but you this is your one, but then the 70 they give you the 2 UC, but then you've just broken it down.
Yeah, I've just written the words in because it's easier to remember it like this than to remember like What do you call it? Variables, and then you have to now remember what does the variables represent.
Yeah. No.
Yeah, so I just remembered like that.
Okay. No, that's
okay.
fine.
So I would have put it as EOQ equals 2 times the U is fine because U can be usage or demand, either or is acceptable. But I wouldn't have times it by C. See, they've used C. I would have just put O for order.
Okay.
And then I would have divided by H, which is holding, which is what they've used, which is fine.
Okay.
Okay, but yeah, it's totally up to you. Maybe just use what they've given you. It doesn't really matter as long as you've got the right numbers in the right places.
Yes.
Okay, I mean, you could write down the equation in words. It would look different to what they've given you on page 70, but it will give you the same answer.
Yeah, okay, no, that's fine. Yeah, I like this way better than that. Your way.
It's up to you. I'm just giving it to you in this way because it's what I've seen in other modules where they haven't tested this level of detail, which is still fine. It just brings in another consideration. Okay, the interest rate and the purchase price.
Yeah.
Okay, so let's look at an example.
Yeah. No, okay.
Page
yeah,
70.
I'll this is one example.
Pardon?
No, yeah, we can do an example. You said page 70.
Yeah, I'm just looking at the activity here, activity 4.4.
I see that, yes.
Okay, so here they said in limited consumes 1,000 kilos of materials per year. As soon as you've got that, you already know what the demand is because demand or usage is what you're using on an annual basis.
Yeah, okay.
Okay, annual usage / demand is 1,000 kilograms.
So it'll always be there. They should actually always tell you what they consume.
Per year, yes. But remember, they can't give it to you per month. Then you must times by 12.
By 12, yeah, of course.
Okay. The variable ordering cost is 5 Rand per order. Order cost is 5. The relevant annual carrying cost incurred was as follows. Okay, so carrying cost. Okay, I see they use the word carrying, not holding. Either or, it's the same thing.
Right. Okay.
Carrying or holding cost. Some textbooks talk about a holding cost. Here they talk about a carrying cost. It's the same. Okay, carrying cost was the warehouse rent, 1 Rand per kilo, or 5,000 in total. Right, so that's 1 Rand per kilo. But now, what is this? This warehouse rent, is the rent a carrying cost?
Yes.
Yes, it is.
Yeah.
Okay. Theft and fire insurance?
Theft. Well, that I think it is, but it wouldn't be would it be variable?
Theft and fire insurance could be variable. So, looking at this, they've given you the average rent, okay, for the warehouse. To me, that's the carrying cost. So, and then they've given you this 20 cents per kilo, and the desired return on investment. Return on investment is 80 cents. What is the 80 cents representing?
I think it's the remainder of the rent.
It's the rate. It's what you want to receive. Do you agree?
Yes.
Yeah, so desired return. The wording of this question is a bit confusing because they talk about a return on investment and then they talk about 80 cents per kilo.
Yeah.
Okay, but then they've given you the theft and fire insurance, which is unrelated to these carrying or annual costs. Do you see that?
Yes.
Because
okay.
the heading for this group of information, the relevant annual carrying cost incurred was as follows, and then they've given you these 3 things. But now, obviously, desired return on investment isn't a carrying cost; it's just the return that you require on those goods, which is a bit separate from what we've got currently.
Right.
Okay, so that you could consider if you were looking at what is the actual rate that you would have to incur on this particular asset, but they don't give it to you as a rate; they just give it to you as an amount. All right. So looking at this, the only thing that I would want to put here would be the warehouse rent and the theft of fire insurance. That's what I would put in as a relevant carrying cost that would be applicable for this business. Right, but if you look at their working, let's see what they've included. Okay, they've used 2 times 1,000. Okay, so the 1,000 is fine. That's the demand. The order cost is fine. The carrying cost, what have they done? Okay, they've only used the 2. They've only looked at 0.2 plus 0.8. Okay, this 0.8 I wouldn't include. I don't know why they're adding it there. Okay, because you're not adding the 80 cents. The 80 cents is the desired return on investment. The desired return on investment isn't part of the holding or carrying cost. Does that make sense?
Yes, yes.
Yeah, so I would correct this. I don't quite agree with this particular example. Okay, to me, from what they've said, they said rent in terms of the warehouse is 1 rand per unit. This is 100% a carrying cost. That you can't dispute. Okay?
Yes.
The theft and fire insurance is also a carrying cost. Right, you can't have goods if you don't insure it, and
Yes.
that would be 20 cents. And that I would also 100% include. Okay, then they tell you about the desired return, ROI. Okay, there they give you the 0.80. Okay, that I wouldn't include. Okay, this is just additional info relating to the holding of stock. Okay, there's no rate here, no interest rate given.
Yeah, no, I agree. It's just 0. But couldn't you work it out though? Couldn't you work out the interest rates?
But it would have to be based on the inventory's value, but you don't know what the inventory is worth.
Yeah, no, exactly, because they're just giving it to us in kilos.
Yes, 100%. Okay, so not the best of examples in terms of wording. Maybe the next one will be better, but yeah, activity, I would have done it this way. I would have shown, if I had to show working, I would show this. 2 times 1,000 times an order cost of, what is the order cost here again? 5.
Yes.
Okay, then the holding cost I would have shown 1 plus 20 cents. That's what I would have shown. Okay, let's show both. That's what I would have shown. Okay, that would have been my answer for this one. I don't agree with the return on investment being included in the actual working. Okay, I would have shown that as my EOQ, and then I would have said EOQ equals, and then I would have worked it out. So the square root of bracket 2 times 1,000 times 5 divided by 1.2 close bracket equals, okay, 91 units. That's what I would have written as an answer, or not units, sorry, kilos.
But how come when I do mine, I put the square root and then I go equals, and then it gives me an answer of 28.8.
Did you put a bracket? Remember, the square root is over the whole thing.
Square, yeah, so I push square root first.
No, okay, which calculator are you using?
I'm using the Casio, the scientific.
Okay, using this one again. Okay, so here's your calculator. So do this on your calculator. Press the on button.
Yes.
Okay, you need to press which button? This button. See that button?
Yes, that one, yes,
Okay,
yes,
press
yes.
that button.
Yes.
Okay. Does the calculator open a bracket for you?
No.
Okay, then press this button, this bracket.
Oh, do you need to put the brackets?
Yes.
Oh, okay, and then do you...
And then type all of it. So then type in 2 times 1,000 times 5, divide by 1, 2, close brackets, equals.
Okay, let me just do that now. Times 5, open bracket, 1 plus...
No, 1.02. Don't put the plus. If you put the plus, then you must put another bracket.
Oh, okay, yes, I think that's where I went wrong. Okay, yeah, so yeah, I was opening other. It's 1. Yeah, so it's 1.2 that I should be putting. Okay.
Yeah, put 1.2 because if you don't, you need to add more brackets to the calculator because the calculator can't do BODMAS.
Yeah.
Okay, you've got to put in the brackets for the calculator. Okay, the calculator just does what you put in.
Yeah, so it's 2 times 1,000 times 5.
Yeah, so on the calculator it's square roots, then brackets. 2 times 1,000 times 5. Divide 1.2 brackets equals like that.
Yeah, but mine still gives me 28.86.
No, something's going wrong. Let's just check my working. 2 times 1,000 times 5 divided by 1.2. Yeah, that's right. Close brackets.
Not too sure.
Okay, let's do it in 2 steps. Let me
Wait, I
show
wanna
more
see-
workings.
I want to see if I can do it like if I can do it like this.
Okay, let's write another step. What is 2 times 1,000 times 5? It's 10,000. Okay, so here I'm going to put 10,000, and then here I'm going to put 1.02.
Oh, I got it. 91 points. I got it.
Did you get it?
Yes. You know why? Because I didn't put a fraction. I just went divide. So if you see your EQ1, what I did now is I put the square root sign, bracket, fraction sign, and then I put the digits and digits.
Okay. Did it work?
It did work. Yes,
Okay.
I went the square root sign, open bracket, 10,000 over 1.2, close bracket equals, and it gave me 91.28.
Okay, then that's fine. Alright, perfect.
I'll just do exactly how it's like that.
Yeah, so our answer is a bit different to theirs because, as I said, I wouldn't have put this desired RI in. That I would have changed in their textbook. I only would have put those 2 in as the carrying costs.
Yeah, but I mean either or. If I did it this way or another way, I mean their way with the added, they wouldn't be wrong. I mean they did it like that.
You know, I don't agree with what they've done because the desired return on investment is separate.
Yeah.
Yeah, that's not part of a holding cost. That's just something additional.
It's additional, yeah.
Okay. Let's see if there's a better one.
But I mean, what would you include for that interest though? The I.
The I you would only include if they give you the I, but it has to be given as a rate because it's times by the purchase price.
Okay, so I would be the interest rate or required return. Okay.
Correct.
Yeah.
But it has to be on the purchase price. There's no price here for these materials. Do you agree?
Yes, I agree.
Okay, there's no material cost here. You've only got the volume, 1,000 kilos. That's it.
Yes. Okay.
Okay. All right. Let's do one where you are wanting that. I think the last one has it. Yes. Question 3 has it. Okay. There. Let's answer your question. Let's do this one. Question 3 in the self-assessment. Page 73.
Yes, I see that. I see it too. Oh, so this one you would have to work out the price.
Yes, they should have given you enough information to get the price.
Yeah, so interest rates, holding costs.
Yeah, they say it costs. Calculate it costs, variable cost to place an order. Okay, no, that's the order. Let's see, the fruit juice. The fruit juice, we need a price. Oh, there, a can of apple juice delivered from T Central warehouse cost 50 cents. It's in there. The price is there.
Oh, yes, okay. Yeah, I see.
You just got to read it.
Yeah. Okay. A can of apple juice delivered to cost 50 cents. Yes, I see it, including...
Okay, so Matthew, read it and then tell me what stands out here.
Okay, so must I read from the beginning?
Yeah.
Okay, so I'm just going to say limited, a regional supermarket chain orders 320,000 cans of frozen apple juice per year from Ladysmith distributor. So then, that's 320,000 would be the demand.
Yeah, 320 is the demand because that's the total, hey?
Yes.
Okay, so let's type that in.
Okay.
What else?
So a can of apple juice delivered to the central. So then frozen. Yeah. So then the price would be 50 cents per
can.
Can.
Correct. What
The company,
else?
so the company borrows funds at 10% interest rate. There's your interest rate.
There you go. 10%.
Yeah, 10%. And then purchasing agent calculates that it costs 15 Rand variable cost to place an order frozen juice, that the variable annual holding is, so yeah, the holding cost would be 0.1.
And what's the order?
For each can, calculates 15 Rand variable cost.
Yeah, you read it. See, there you go. You've read all of it. See, there we go. Copy, paste. There's the working for it.
Cool. Yeah, let me type that into my calculator.
Yeah,
and then,
try to do the work on your calculator because I see that you made a mistake with the other one. Let's see if we get this one right. I'll do it here as well. You can check it with my answer.
15 over Okay, I got 43817.8046.
Yeah, I also got that.
Cool. Yeah, no, that's fine.
Let's just check. They've given 2 times 320,000 times 15 divided by 0.1. Oh, it's a plus, not a multiply. Plus, not multiply. You see that?
Okay. Yes. Yeah.
Okay. Let me just go check the equation. Is that a typo? Is that correct? Let's see. Let's just check the answer because the answer might be wrong. Oh, it is the plus. Okay, I wrote it down wrong. Look at page 70.
Okay.
Sorry, that's my mistake. It should be a plus here. I left the plus out. Look at this equation.
Oh yeah, holding cost. Yes, holding
Sorry,
cost
I left the plus.
plus. Okay, so it'll be holding cost plus, not times interest
Not
rate.
times, yes. Okay, sorry, I left the plus out when I wrote down the equation.
Oh, so then it'll be 0.1 plus open bracket 0.1.
Correct.
Okay, so yeah, I can just tweak
Yeah,
that.
just add the plus to your formula. Sorry, I made a mistake there. See page 70. Yeah, page 70 has the correct formula. I didn't copy it correctly.
Okay, so
It should look like that. Plus, not times. I left out this plus.
All right, that's fine.
Okay.
So
Right?
yeah, so 0. I just wanted to see. Yeah, so 0.1 plus 0.5 gives you 0. No. 0.1 times 0.5 equals. And then you plus the 0.1, which equals okay, so that's 0.15, 8,000.
Correct. Yeah, that's right. Okay, and that covers an example where you have that. So you just need to be aware that sometimes they could give you that information and you need to take that information into consideration when doing the calculation for EOQ.
Right, okay.
Okay, happy with that section?
Yes, happy.
Alright, good. Okay, that was study unit 4. Did I make a note of it?
Yes.
Let me just make a note of it. Study unit 4. Underline. Okay, let's look at study unit 5.